Based on the historical data and forecast, Bitcoin shows a downtrend. The RSI indicates that the asset is generally neutral, fluctuating around the 50 mark, but recently showing signs of weakening with values dipping below 50. The Bollinger Bands are narrowing, suggesting decreasing volatility, but the forecast indicates a continued downward trajectory, with prices dropping from 63,500 to 60,900 over the next week. Given this information, I recommend a short selling strategy. We will enter a short position at $63,500. The stop loss will be set at $66,400, just above the upper Bollinger Band, to protect against a potential short-term reversal. The initial target price is $62,600, aligning with the forecast price for August 4th. To refine the strategy, we will use a dynamic stop-loss approach. Once the price reaches $63,000, we will move the stop-loss to $63,100. If the price continues to fall and reaches $62,000, we will adjust the stop-loss to $62,100. The final target price will be $60,900, based on the lowest forecast price. This strategy combines technical indicators and forecast data to maximize potential returns while mitigating risk. The predicted price movement is based on the Bollinger Bands and RSI, which suggests a downward trend. Based on the historical data and forecast, Ethereum has shown volatility with a range between $1810 and $1950. The RSI indicates that the asset is currently in a neutral zone, fluctuating between 50 and 65. The Bollinger Bands suggest periods of increased volatility followed by consolidation. Considering the forecast for the next week, which predicts a downward trend with prices around $1830 to $1890, I propose a short-term strategy focused on capitalizing on potential dips. We will initiate a short position at $1,890, placing a stop-loss order at $1,910 to protect against unexpected upward movements. The target price for this trade will be $1,850, aiming to capture a moderate profit from the anticipated decline. To refine this strategy, we will incorporate RSI signals. If the RSI falls below 30, signaling an oversold condition, we will consider a long position at $1,830, with a stop-loss at $1,810 and a target price of $1,880. Conversely, if the RSI exceeds 70, indicating an overbought scenario, we will avoid initiating any new positions. Combining these signals with the Bollinger Bands, if the price touches the upper band, we will avoid a long position. This integrated approach, blending technical indicators and price action analysis, aims to maximize potential returns while mitigating risk. Based on the historical data and forecast, BNB shows a potential for upward movement. The price has been fluctuating within a range, with support at $587 and resistance at $592. The RSI has been mostly below 80, indicating that the asset is not currently overbought. However, the recent spike to 60.8 on July 31st suggests increasing momentum. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the upper band. Considering the forecast for the next week, which predicts a steady increase to $608, I recommend a long position with an entry price of $586 on August 1, 2026. A stop-loss should be placed at $583 to limit potential losses, and a target price of $605 should be set to capture a significant portion of the forecasted upward movement. To refine this strategy, I will incorporate an RSI-based filter. If the RSI falls below 20, oversold, we will consider entering a long position. If the RSI exceeds 80, overbought, we will consider exiting the position. Combining this with the Bollinger Bands, we can adjust our entry and exit points based on the band width. For example, if the price breaks above the upper band and the RSI is below 80, it could be a strong buy signal. Conversely, if the price falls below the lower band and the RSI is above 20, it could be a sell signal. Given the current conditions, the initial long position at $586 with a stop-loss at $583 and a target price of $605 remains the most efficient strategy for maximizing returns while managing risk. Based on the historical data and forecast, XRP shows a slightly downward trend with price fluctuating around $1.07 to $1.11. The RSI consistently remains between 41.1 and 57.3, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been trading within the bands, with the bottom band around $1.03 to $1.06 and the top band around $1.14 to $1.16. Given the forecast for the next week predicts a price decrease, potentially reaching $1.04, I recommend a contrarian strategy focused on anticipating a bounce from the support level. My strategy involves a long position entry at $1.07, placing a stop-loss order at $1.04 just below the support level to limit potential losses. The target price is set at $1.11, aiming to capture a modest profit as the price rebounds. This strategy combines the support level as a potential entry point with the Bollinger Band's lower band as a stop-loss trigger. The RSI, while not strongly oversold, reinforces the possibility of a short-term bounce. This portfolio is designed for a balance of risk and reward, capitalizing on short-term fluctuations while protecting against significant downside risk. Based on the historical data and forecast, Solana exhibits a downtrend, supported by the decreasing center of the Bollinger Bands and the forecast prices consistently below the recent closing prices. The RSI values fluctuate around the midpoint, indicating indecision, but the recent values are trending downwards, reinforcing the bearish outlook. Given this, I propose a short-selling strategy. Entry price will be $73.7, placing the stop-loss at $74.1 to protect against a potential short-term bounce. The initial target price is set at $71.8, aligning with the forecast price for August 2, 2026. To maximize returns and manage risk, I recommend employing a tiered approach. If the price reaches the initial target of $71.8, we will move the stop-loss to the entry price of $73.7, securing a risk-free profit. Subsequently, if the price continues to decline, the next target price will be $71, corresponding to the forecast price for August 7, 2026. This strategy combines RSI signals, Bollinger Bands analysis, and forecast data to create a dynamic and potentially high-return portfolio, while diligently managing risk through strategic stop-loss placements. Based on the historical data and forecast, TRON shows a slightly upward trend with price fluctuations within a narrow range. The RSI consistently hovers around the 50 mark, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been contracting, suggesting a period of consolidation. Considering the forecast for the next week, the price is expected to remain relatively stable around 0.325 to 0.329. Therefore, I recommend a cautious, range-bound trading strategy. My strategy involves a combination of RSI and Bollinger Band signals. I will enter a long position at $0.325+, placing a stop-loss order at $0.318+, just below the support level. The initial target price will be $0.333+, near the upper Bollinger Band. If the price reaches this target, I will move the stop-loss to break even to protect profits and consider a second target at $0.335+. This strategy aims to capitalize on minor upward movements while limiting downside risk with a well-defined stop-loss. The RSI indicator will be used to confirm the entry, looking for a slight dip below 50 before entering the position. This combined approach seeks to maximize returns within the current market conditions. Based on the historical data and forecast, Dogecoin demonstrates a downtrend with considerable volatility. The RSI consistently hovers around the 30 to 40 range, indicating a neutral to slightly oversold condition. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential short-term bounce. The forecast data for the next week projects a continued downward trend, with prices falling to $0.0674. Considering these factors, I recommend a carefully managed long position with a tight stop-loss. My strategy is to enter a long position at $0.0698. The stop-loss should be placed just below the support level at $0.0689 to protect against further downside. The initial target price is set at the resistance level of $0.0717, representing a reasonable profit target given the current market conditions. If the price reaches the target, consider taking partial profits and moving the stop loss to break even. If the forecast proves accurate and the price continues to decline, a further short position could be considered once the price breaks below the support level. This combined approach balances potential gains with risk mitigation, aligning with a high-return investment strategy. Based on the historical data and forecast, Zcash exhibits a clear downtrend. The price has been consistently declining from $558 to $458 over the past 2 weeks, with a forecast predicting further decreases to $450. The RSI consistently remains below 80, indicating no overbought conditions, but recently approached the oversold level of 20, suggesting potential for a short-term bounce. The Bollinger Bands show a narrowing band, which could indicate increased volatility. Considering these factors, I recommend a short position strategy. We will enter a short position at $478, placing a stop loss at $468 to protect against a potential rebound. The initial target price is $452, aligning with the forecast price for August 7, 2026. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI dips below 40, we will tighten our stop loss to $466. If the price touches the lower Bollinger Band, we will lower the target price to $450, anticipating a potential bounce. Conversely, if the price breaks above the upper Bollinger Band, we will exit the position immediately to avoid significant losses. This dynamic approach, combining trend analysis, RSI, and Bollinger Bands, aims to maximize returns while managing risk effectively. The portfolio will prioritize this short position due to the strong downtrend and bearish forecast. Based on the historical data and forecast, Cardano shows a slight upward trend with some volatility. The RSI consistently fluctuates around the midpoint, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show that the price has been trading within a range, recently approaching the lower band. Considering the forecast, the price is expected to rise slightly, and the support price is $0.156. Therefore, I propose a moderately bullish strategy utilizing RSI and Bollinger Bands. My strategy involves entering a long position when the RSI falls below 40, indicating an oversold condition. The entry price will be $0.164. We will set a stop loss at the support price of $0.156 to mitigate potential losses. The target price will be $0.176, aligning with the forecast and a reasonable profit margin. This strategy combines the oversold RSI signal with the Bollinger Bands indication of potential price recovery. This approach aims to capitalize on short-term price bounces while managing risk with a clear stop loss and target price. Based on the historical data and forecast, Chainlink demonstrates a sideways trend with fluctuating price movements between the support price of $8 and the resistance price of $8.3. The RSI values hover around the mid-range, indicating neither strong overbought nor oversold conditions. However, the forecast for the next week predicts a downward trend, with prices decreasing from $8.33 to $8.06. Considering these factors, I propose a short selling strategy with an entry price of $8.33. To mitigate potential losses, a stop loss should be set at $8.46, just above the recent resistance level. The target price for this short position is $8.06, aligning with the forecast price. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the upper band, it indicates a potential shorting opportunity. Given the forecast and the current price near the upper Bollinger Band, a short position is warranted. The RSI readings are not consistently in oversold territory, so relying solely on RSI is not ideal. Therefore, the combined strategy involves shorting at $8.33, setting a stop loss at $8.46, and targeting $8.06. This approach balances the trend analysis, forecast data, and Bollinger Band signals for a potentially high return investment. Based on the historical data and forecast, Arbitrum exhibits a downtrend with periods of consolidation. The RSI consistently fluctuates, dipping below 40, indicating oversold conditions, and occasionally approaching 50, suggesting a neutral stance. The Bollinger Bands show that the price is currently near the lower band, reinforcing the potential for a short-term bounce. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands for optimized returns. My strategy involves a tiered approach. Firstly, initiate a long position at $0.0789 when the RSI falls below 40 and the price touches the lower Bollinger Band. Set a stop loss at $0.0771, just below the support level, to mitigate potential losses. The initial target price is $0.0795, aligning with the forecast price and the middle Bollinger Band. If the price reaches this target, reevaluate the RSI and Bollinger Bands. If the RSI remains below 50 and the price stays within the Bollinger Bands, consider extending the target to $0.0804. This strategy balances risk and reward, capitalizing on short-term bounces while safeguarding against further declines. Based on the historical data and forecast, VeChain shows a slightly upward trend. The price has been fluctuating within the support of $0.00468 and the resistance of $0.00496. The RSI indicator has been hovering around the mid-range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Therefore, I propose a moderately bullish strategy. My recommended strategy is to enter a long position at $0.00471. Given the proximity to the support level and the potential bounce indicated by the Bollinger Bands, a stop loss should be placed slightly below the support at $0.0046. The target price should be set near the resistance level at $0.00483, aiming for a reasonable profit while acknowledging the current resistance. This strategy combines elements of support and resistance trading with the momentum indication from the Bollinger Bands, offering a balanced approach for potentially high returns. Based on the historical data and forecast, just shows a slightly upward trend with recent price fluctuations. The RSI values hover around the mid-range, 52.5 to 68.6, indicating neither strong overbought nor oversold conditions. However, the forecast for the next week predicts a consistent increase, suggesting a potential continuation of the upward trend. The support price of $0.0973 provides a floor, while the resistance price of $0.104 has been tested recently. Considering the Bollinger Bands, the price has been oscillating within the bands, with the recent movement towards the upper band indicating bullish momentum. Therefore, I recommend a long position strategy with an entry price of $0.104. Given the recent resistance at $0.104 and the forecast predicting continued upward movement, this is a reasonable entry point. Set a stop-loss order at $0.0973, just below the support level, to limit potential losses if the price reverses. For the target price, aiming for $0.106, slightly above the forecast high, seems achievable. This strategy combines the momentum from the Bollinger Bands, the support and resistance levels, and the positive forecast to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Pendle shows a slight downward trend, with the forecast prices hovering around $1.45 to $1.47. The RSI consistently remains below 80, indicating it's not in an overbought condition, but it has dipped below 40 a few times, suggesting oversold periods. The Bollinger Bands indicate periods of volatility, with prices occasionally touching the upper and lower bands. Considering the support price of $1.42 and the forecast, I recommend a long position strategy when the RSI falls below 40, specifically when it reaches 42.7 on July 31, 2026. The entry price should be $1.44, with a stop-loss placed just below the support level at $1.42. The target price should be set at the resistance level of $1.46, aiming for a quick profit. To refine this strategy, I suggest incorporating the Bollinger Bands. When the price touches the lower band, it indicates a potential oversold condition, reinforcing the RSI signal. Therefore, a modified strategy would be to enter a long position when the RSI is below 40 and the price is near the lower Bollinger Band. For example, on July 31, 2026, the RSI was 42.7 and the price was $1.44, close to the lower Bollinger Band of $1.4. The entry price would be $1.44, with a stop loss at $1.42 and a target price of $1.46. This combined approach, utilizing both RSI and Bollinger Bands, provides a more robust and potentially higher-yielding investment strategy for Pendle. Based on the historical data and forecast, Dash exhibits a downtrend. The RSI consistently fluctuates below 50, with periods of oversold conditions, particularly around July 28 and July 31 where it reached 33.0 and 36.6 respectively. The Bollinger Bands show that the price has been trading within the bands, but the recent downward trend suggests a potential breach of the lower band. The forecast for the next week indicates a continuation of this downward momentum, with prices hovering around $30.8 to $29.5. Therefore, I propose a short position strategy. Entry price will be $30.8, with a stop loss set at $32.1, just above the recent resistance level. The initial target price is $29.7, aligning with the established support level. To refine the strategy, I will incorporate RSI and Bollinger Band signals. If the RSI dips below 20, indicating a strong oversold condition, we will consider covering the short position. Conversely, if the price touches the lower Bollinger Band, it could signal a potential bounce, prompting a partial profit-taking or adjustment of the stop-loss. The final portfolio will be a blend of the trend-following short strategy and the RSI/Bollinger Band signals, aiming to maximize returns while managing risk. A secondary target price will be $29.5, and if the RSI reaches 80, the position will be covered. Based on the historical data and forecast, Jito shows a downtrend. The price has been consistently approaching the support level of $0.5, and the forecast for the next week indicates further decline, reaching as low as $0.471. The RSI consistently remains below 50, fluctuating between 33.3 and 48.8, suggesting a bearish momentum. The Bollinger Bands also support this view, with the price frequently touching the lower band. Therefore, I recommend a short position strategy. We will enter a short position at $0.515. The stop loss will be set at $0.538, just above the recent high, to limit potential losses if the price unexpectedly reverses. The target price will be $0.471, aligning with the lowest forecast price. To optimize returns, I propose a portfolio combining the RSI, Bollinger Bands, and support/resistance levels. We will enter a short position at $0.515. If the RSI drops below 30, indicating an oversold condition, we will hold the position, expecting a bounce. If the price touches the support level of $0.5, we will consider adding to the position. Conversely, if the price breaks above the $0.538 stop loss, we will immediately exit the trade. If the price reaches $0.471, we will take profit and secure the gains. This combined approach leverages multiple indicators to enhance the probability of success and manage risk effectively. Based on the historical data and forecast, Conflux shows a downtrend with increasing volatility. The RSI has been fluctuating below 50, indicating a weakening momentum. The Bollinger Bands are widening, suggesting increased price fluctuations. The support price remains consistently at $0.0422, while the resistance is around $0.0436. The forecast for the next week indicates a sideways movement around $0.0427, with minor fluctuations. Considering these factors, I propose a short-term contrarian strategy focusing on capitalizing on short-term pullbacks. Specifically, I recommend a strategy combining RSI and Bollinger Bands. When the price touches the lower band and RSI falls below 37, enter a long position at $0.0411 plus $. Set a stop loss at $0.0409 plus $, to limit potential losses. The target price would be the resistance level at $0.0436 plus $. If the RSI reaches 80 before hitting the target, exit the position. This combined strategy aims to benefit from temporary price corrections while mitigating risk through stop-loss orders and capitalizing on resistance levels. The forecast data suggests a stable price, making this a low-risk, high-reward strategy. Based on the historical data and forecast, Pump.fun exhibits a slightly upward trend, fluctuating within a defined range between 0.00164 and 0.00212. The RSI consistently remains above 50, indicating a generally bullish sentiment, though it occasionally dips towards oversold levels. The Bollinger Bands show periods of volatility, with the price frequently touching or nearing the upper band, suggesting potential for short-term upward movements. Considering this, I recommend a strategy that combines RSI and Bollinger Bands to capitalize on these fluctuations. We will implement a combined strategy with an entry price of $0.00199, a stop-loss price of $0.00178, and a target price of $0.00212. The strategy will involve entering a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, confirming an oversold condition. We will exit the position when the RSI reaches 80, indicating an overbought condition, or when the price hits the resistance level of $0.00212. The stop loss will be placed slightly below the lower Bollinger Band to protect against unexpected downward movements. The target price of $0.00212 aligns with the resistance level, offering a reasonable profit margin. This combined approach leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ether.fi has shown significant volatility, bouncing between a support level of $0.4 and a resistance level of $0.428. The RSI has fluctuated, indicating periods of both overbought and oversold conditions. The Bollinger Bands have also widened, suggesting increased price movement. Given this analysis, I propose a strategy that combines RSI and Bollinger Band signals, with a focus on short-term gains. The strategy will initiate a long position when the RSI falls below 50 and the price touches the lower band of the Bollinger Bands, indicating a potential oversold condition. We will enter a long position at $0.418, placing a stop-loss order at $0.4 to limit potential losses. The initial target price will be $0.428, aligning with the resistance level. To further refine the strategy, we will implement a trailing stop-loss mechanism. Once the price reaches $0.42, we will adjust the stop-loss to $0.41. If the price continues to rise, reaching $0.428, we will take profit and exit the position. However, if the price retraces and hits the adjusted stop-loss of $0.41, we will exit the trade with a small profit. This dynamic approach allows us to capture gains while minimizing risk. Considering the forecast data, which indicates a price range between $0.417 and $0.424, this strategy offers a high probability of success, capitalizing on the potential for a short-term upward movement. The portfolio will consist of 70% of this strategy and 30% of a conservative strategy that focuses on holding the position for a longer period. Based on the historical data and forecast, DeXe shows a clear upward trend, particularly evident in the recent forecast prices. The RSI consistently remains below 30, indicating an oversold condition, which suggests a potential for a strong bounce. The Bollinger Bands also support this view, with the price nearing the lower band for a significant portion of the period. Therefore, I recommend a long position strategy. We will enter a long position at $6.98 on August 1, 2026. Given the strong upward momentum and the oversold RSI, a tight stop-loss is advisable. Set the stop-loss at $5.55 to protect against a potential reversal. The initial target price will be $7.58, aligning with the forecast for August 2, 2026. To maximize potential gains and manage risk, we will employ a tiered target approach. After reaching $7.58, we will move the stop-loss to break even at $6.98. If the price continues to rise, the next target will be $7.3 on August 3, 2026. Finally, if the price reaches $6.33 on August 4, 2026, we will take partial profits and adjust the stop-loss to $6.33. This strategy combines the momentum of the upward trend, the oversold conditions indicated by RSI, and the support of the Bollinger Bands to achieve high returns while effectively managing risk.